With all of the moving pieces, the market just doesn't seem to care. With Trump threats not really moving the needle for stocks, we got earnings warnings, but who cares? We got AI to save the day and 5 mega stocks to come in and do all of the heavy lifting yet again. So overall, we didn't get much news from Trump today, but stocks are continuing to really shrug off Trump's tariff threats, viewing them as flexible. The chief strategist at LPL, Adam Turnquist, pointed out that the rally since June for the S&P 500 consisted of 5 major stocks, contributing to over half of the index's returns of 5.2%. What does this point to? Lower market breadth. And is that sustainable or seen as a healthy rally? Not really. So the 5 stocks that I was mentioning were Nvidia, which you could barely see it, but look above my head right here. You could see its market cap is $4 trillion as of market close today. So that's a positive sign. So Nvidia is one of those stocks and it's doing good. We got Microsoft, Meta, Broadcom, and Amazon being those 5 stocks doing the heavy lifting for the S&P 500. And if you note today, I'm not going to pull it up myself. It'll take forever because my computer's kind of slow. But Nvidia was the only stock to close out green in that positive territory today. So all of the other stocks were red. What does that kind of point at? A possible breather. And then overall, I mean, Bitcoin hit a new all-time high. We're still at all-time high areas. We hit as high as 117,000, with some people calling for 150,000 being the next stop. The NASDAQ 100 barely down today, giving back some of the losses and trying to, just barely ticking up in the after hours. And the VIX is still under 16, just bouncing to the downside off of the 50-day moving average. So overall, the direction of the stocks and the overall market, it still continues to be predicated on, one, what actually happens with these tariffs, this ongoing news, which today was kind of quiet. We'll keep on watching that. The second is how that impacts growth and inflation in the economy. So what do these tariffs do to those 2 factors? And then the third one is how, now that inflation and growth in the economy is impacted by these tariffs, how does all of that impact jobs and corporate earnings? That's what everybody's watching these days, and we talk about this all the time. I'm like a broken record player. And yeah, it's super uncertain what happens and how the job market holds up and if the trend in the market continues up or not. But some of the hope that lies out there on why people are still bullish in the stock market lies in AI, artificial intelligence, as the rising spend into AI infrastructure for companies has been the top of the priority, and can help bring down costs and help boost earnings. Maybe. You got to remember, AI is not great yet, but it is pretty good. Morgan Stanley pointed out that 60% of CIOs expect to have AI projects in production by the end of the year. Then similarly, Piper Sandler analyst James Fish noted that 93% of CIOs plan on increasing AI infrastructure spend this year, with 48% saying that increase will be significant versus the 25% last year that we got. So we see that a lot of companies are dabbling in AI. They're increasing their spend on AI. So that's the common trend here. That's what people are interested in. That's what companies are interested in. And more companies are spending more money in those industries. Now, they also noted that more than half of the CIOs admitted that the rise of AI will weigh on jobs. So there's a big question mark there. But hey, in the meantime, margin, baby. Earnings are coming up, and we want these earnings to be good, so companies going ahead and adopt this AI, make them earnings juicy, make them stocks go to even higher all-time highs, and we'll worry about the problems that come with it later. But what else matters right now other than that? Well, I don't know. But some are calling for this bubble to burst. And there's this article right here, the NASDAQ is mirroring the 1990s. It isn't a bubble this time. And, oh, this is by Undefined. And what they go in to talk about is, with this market rally being led by tech and artificial intelligence, some of the similarities they're seeing are related to these 1990s, that dot-com bubble. And they're not necessarily calling for a dot-com crash to the same extent, because companies are more fundamentally sound and have stronger fundamentals these days. But Data Trek Research co-founder Jessica Rabe, maybe that's how you say the name, just kind of pointed this out and noted that if the pattern continues, it suggests that the NASDAQ does have more room to run, assuming everything keeps falling into place with these similarities. It does have more room to run till about mid-October, before pullbacks become the topic of discussion, but that doesn't have to be what necessarily happens. Jessica just points out that rallies driven by new tech, this disruptive new technology, occasionally faces problems which we aren't free of right now either. There's tons of other problems going on, and we discuss that on this channel all the time. We talk about it all the time. Now, companies are reporting that inflation is seeping through the cracks a little bit, and tariffs are causing consumers to trade down, but they still have jobs, so it's not terrible yet. But inflation is starting to show up. We're hearing that from more your like grocery related sectors and people who sell goods in grocery stores. So we'll keep on watching that, but people do have jobs right now, so like I said, it's not terrible. We did get some jobless data today. So initial jobless claims came out, and it fell to a 2-month low, dropping by 5,000 to 227,000, a decrease of 5,000. Like I said, that was lower than the expected 235,000 that they expected to come in. So quite a bit lower. New claims fell in 28 out of 53 states and territories, and the number of continuing claims rose by 10,000 to 1.9-ish million. Where's that number at? Right here, I believe. Yeah. So there we go. Boom. So yeah, I mean, we're slightly up from last week, the week prior. So this data is looking at last week, and they're comparing to the week before that. I mean, overall, there's no like huge red flags. The continuing claims number is still the highest level since November 2021, but overall, there's still not a lot of hiring. But there's not a lot of laying off either. So it's not like a crap show out there in the job market. But it goes back to AI and what some of them CIOs think in the longer term. Just note that on your yellow sticky. We are also seeing that we got decent demand in these treasury auctions for longer term treasuries, as this 30-year treasury auction went pretty smooth. They locked in a cool 4.889%, risk-free pretty much, assuming that you don't believe the government will ever default. So all of that seems like good news. Doesn't seem like tariffs are doing too much damage to some of the purchasers of these treasuries. And we got some Fed speak today. So the San Francisco Fed President Mary Daly spoke today, and what she sees is that we will get 2 quarter cuts this year. So 2 rate cuts of 0.25% or 25 basis points, equaling 0.5% off this year. And she doesn't support waiting too long, because she doesn't see large price increases for at least consumers showing up or being sticky this year, and maybe hinting at earnings taking a hint. She says businesses are likely to find ways to share their higher taxes without passing them on to consumers. Maybe the investors get this passed on, and that goes into earnings and people watching earnings. We also got another Fed governor speak. We got a Fed governor speak today, Chris Waller, and what Chris Waller supports is cutting in July, saying that inflation coming down is enough to justify a rate cut in July's meeting, so right around the corner, and that tariffs aren't necessarily a reason to delay. Now, let's see what, if any, moves happen for July. Nope. So pretty much guaranteed that we're going to stay the same unless CPI data coming out on Tuesday, and we'll talk about that later on. Kind of dropping the odds of a rate cut at September's meeting, but I mean, it's still over 50%, so it looks like we're pretty set there. Now, let's turn our table to what's going on next week. So once this loads, we don't have nothing scheduled on Monday. That is in honor of Tuesday, which we'll get a read on inflation data, the consumer price index, and this will be looking back at June. And some are expecting to see this inflationary data from the tariffs start seeping through and show up in this data. They haven't dropped the median forecast on Market Watch, but we'll look somewhere else for that. But the question is whether or not we see elevated inflation from these tariffs or not. Now, and I mean, Tuesday's pretty busy overall. And then we got PPI Wednesday, initial jobless claims, U.S. retail sales, home builder, more Fed speak, housing starts, consumer sentiment. All of that's going to be a busy week next week. But back to zero in on consumer price inflation index inflation data. What the Cleveland Fed nowcast shows is that for June 2025, they're expecting CPI to increase by 0.25, core CPI to increase by 0.23, and then core PCE. And this is updated as today. And they're expecting July's CPI data to come in even lower. And then core CPI a little bit higher than last month. June year over year, 2.6, 2.95. What was the last reading though? 2.95. Ooh. So 2.8%. So we're expected to go up to 2.95 for June 2025's core PCE. And then headline, or core PCE, last month it was 0.1%. We're expecting it to come in at 0.23% next Tuesday. So keep on watching these numbers, y'all. Like I always say, I'm going to be here to keep on talking about what's going on so we're all updated. They say the smartest student is the teacher. I know a lot of people don't watch these videos. I know I'm not the most well-spoken and I don't have access to the best data. But what I get out of this is that I'm constantly taking notes, I'm constantly reading, I'm constantly watching and trying to stay aware of what's going on, and I'm sharing it the best that I can. So hopefully these videos provide value to you all. I'm going to be here tomorrow to talk about what's going on, and the next day and the next day. As long as news keeps on coming out, I'm happy to talk about it. Hope your night is great. We're heading off into the weekend. We almost made it, y'all, and I'll see y'all next time. Y'all have a blast.